Hello, welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so you just bought a house.
Yay!
We'll say you just bought it.
Congratulations.
And you didn't pay cash, you got a loan.
Got a loan.
So you have that Impound account. They're taking out money for stuff. And you're so excited. You want to be like the good home buyer. And you just realize that it's a new tax year. And you go on the site and you realize you have this house tax, property taxes. So you see how much it is and you write a check and you send it in. Is that the right thing to do?
No, don't do it.
Don't do what? Okay, why don't you write a check and send it in?
Okay, so first of all, I don't know how it works in other places, but here in Clark County, we get our property tax bill about the middle of July, and it runs from this year, so it runs from July 1st to June 30th of next year. So the middle of July, we all get our property tax coupons. Now, if you have a mortgage and you did not select to not have an escrow account or impound account, then your lender will make those payments out of that account. So please do not write a check to the county to pay those property taxes.
Don't do it.
They're hefty. The quarterly taxes for a $350,000 house are about $1,000 per quarter. So please don't write that check. Your lender will do that. You do want to, however, send a copy of that tax bill to your lender. Do not assume that they are going to pay those taxes on their own. Assume nothing and prepare for everything. So go ahead and send them that property tax bill. They'll tell you that they already know and that they have it, and that's great. But I would rather that they have it twice than not have it at all. So remember, please don't pay that $1,000 property tax bill for the quarter, or even worse, the $4,000 or $5,000 bill for the year, because that is being paid by your lender through your impound account. The other thing that your lender will pay for out of that impound account is your hazard insurance. That's your fire insurance, like if the house burns down or if you're robbed and that sort of thing. They will pay for that as well. Just make sure that they have the contact information for the insurance company, and that the insurance company has your lender's information so that they can send them the bill. It is still your responsibility to make sure that your lender has paid your property taxes, that your lender has paid for your insurance. Even though they're supposed to, it is your responsibility. It is your house.
Yeah, most lenders do not want you being responsible for property taxes, because if you forget, and even if you've been making your mortgage payment, they can foreclose and take the house. The county or whoever can actually put the title of the house in their name, and depending on your state law, could wipe out the loan, meaning that depending on how it is, it's potential that they could just wipe out your loan, which means you get thrown out of the house, but you don't have the house anymore. But now you still owe the money, because the money's, remember, the money is not tied to the house; it's tied to you. You got a loan, and if you lose the house for whatever reason, because your HOA took it, because you forgot to pay your HOA or you got a fine. I have a video on that. What happens when you don't pay your HOA? Put it right here.
Right.
Watch that video. It's a very good video. What could happen? It's not a new video. It's a video I did a while back. But you don't want to lose your house, and then because you're still going to owe the money, and it's going to be very difficult to get out of it. Now we're talking attorneys and IRS. You don't want to deal with any of that.
So make sure that your lender is paying your property tax, and make sure that your lender is paying for your hazard insurance.
Yep.
If you have any questions, leave them in the comments below. Subscribe to the videos, hit the notification bell, and share them with your friends. Happy Tax Day, and we'll see you on the next video. Bye.
Bye.